Real estate investment, building a portfolio for long-term wealth. Welcome to Income Ideas Insider, where we explore the secrets of real estate investment, building a portfolio for long-term wealth. Investing in real estate can be a powerful strategy for building long-term wealth. By carefully selecting properties and managing them effectively, investors can benefit from rental income, property appreciation, and tax advantages. Here are 10 key points to consider when building a real estate investment portfolio for long-term wealth. Before we dive into our video, don't forget to hit the like button and subscribe to our channel for more content. Number 10. Diversification. Diversifying your real estate portfolio can mitigate risk and enhance returns. Investing in a mix of residential, commercial, and mixed-use properties across different locations can spread risk by reducing dependency on a single market or property type. Residential properties offer stable income, while commercial properties provide higher yields. Mixed-use properties combine these benefits. Various locations further reduce risk by diversifying market exposure. This approach not only protects against market-specific downturns, but also leverages the growth potential of different markets. Number 9. Set clear goals. Establishing clear investment goals is essential for guiding your real estate strategy. Whether you aim for passive income, capital appreciation, or a combination of both, defined objectives will shape your portfolio and investment decisions. Clear goals provide a roadmap for selecting the right properties, financing options, and management practices. They also enable you to measure progress, assess the performance of your investments, and make necessary adjustments to stay on track. By setting specific, measurable, achievable, relevant, and time-bound, SMART goals. Number 8. Financial planning. Developing a comprehensive financial plan is essential for successful real estate investment. Start by defining your investment goals, whether it's passive income, long-term wealth accumulation, or portfolio diversification. Establish a budget that considers property costs, maintenance, and potential vacancies. Establishing clear investment goals helps guide your strategy. Whether you're looking for passive income, capital appreciation, or a combination of both, having defined objectives will shape your portfolio and investment choices. Clear goals also help measure your progress and make necessary adjustments to LORE financing options such as mortgages, loans, or partnerships to leverage your capital. Plan exit strategies for each property, whether it's selling, refinancing, or renting. Working with a financial advisor can provide valuable insights and ensure your plan aligns with your long-term objectives. A well-thought-out financial plan is key in maximizing returns and managing risks in real estate investment. Number 7. Property selection. When selecting properties for investment, it's crucial to align them with your overall investment strategy. Consider properties in desirable locations with good amenities and potential for value appreciation. Desirable locations often have higher demand from tenants, leading to lower vacancy rates and potentially higher rental income. Conduct thorough due diligence to assess the property's condition, potential rental income, and any potential issues that could affect your investment. By choosing properties that align with your strategy and conducting thorough research, you can maximize your chances of success in real estate investment. Number 6. Risk management. Implementing risk management strategies is essential to protect your real estate investments. Purchase comprehensive insurance coverage to safeguard against unforeseen events like natural disasters, fires, or liability claims. Additionally, consider setting aside a portion of your rental income for maintenance and repairs to address issues promptly and avoid unexpected expenses. Conduct regular property inspections to identify potential problems early and mitigate risks. By implementing these risk management strategies, you can protect your investments. Number 5. Tenant screening. Screening tenants carefully is crucial for successful real estate investment. Develop a thorough screening process that includes background and credit checks, employment verification, and rental history review. Look for tenants with a stable income and good rental track record to minimize the risk of late payments or property damage. Additionally, consider conducting interviews to assess the tenant's suitability for the property. By screening tenants carefully, you can reduce the likelihood of issues arising and ensure a positive rental experience for both parties. Number 4. Network with other investors. Building a network of real estate professionals and investors provides valuable insights, advice, and opportunities. Join local real estate investment groups, attend industry events, and engage in online forums. Networking helps you stay informed, share experiences, and discover new investment opportunities. Building a real estate portfolio for long-term wealth requires strategic planning, continuous learning, and diligent management. By educating yourself, setting clear goals, diversifying your investments, and staying updated with market trends, you can achieve financial security and long-term success in real estate investment. Number 3. Tax efficiency. Real estate offers several tax benefits that can help investors maximize their returns. Depreciation deductions allow you to deduct the cost of the property over its useful life, reducing taxable income. Mortgage interest deductions allow you to deduct interest payments on your mortgage, further lowering your taxable income. Additionally, 1031 exchanges allow you to defer capital gains taxes by exchanging one investment property for another similar property. Consult with a tax advisor to understand these benefits fully and ensure you are maximizing your tax advantages as a real estate investor. These strategies can significantly enhance your investment profitability. Number 2. Long-term perspective. Real estate investment is a long-term endeavor that requires patience and a strategic approach. Avoid making impulsive decisions based on short-term market fluctuations, as this can lead to poor investment choices. Instead, focus on building a sustainable portfolio that generates consistent returns over time. Consider factors such as property location, rental demand, and potential for appreciation when making investment decisions. By adopting a patient approach and focusing on long-term goals, you can build a successful real estate portfolio that provides financial security. Number 1. Continuous learning. Staying informed about real estate trends and market dynamics is crucial for successful investment. Attend seminars and workshops to learn from industry experts and stay updated on the latest trends. Reading books and industry publications can also provide valuable insights into investment strategies and market conditions. Networking with other investors can help you gain new perspectives and access to potential investment opportunities. By expanding your knowledge and staying informed, you can make more informed decisions and build a successful real estate investment portfolio. Building a real estate investment portfolio for long-term wealth requires careful planning, diligent research, and a commitment to sound investment principles. By diversifying your portfolio, conducting thorough due diligence, and managing risk effectively, you can create a stable and profitable real estate investment strategy. If you find our videos helpful, please share, subscribe, and hit the like button to support our channel. Your support enables us to bring you more valuable content. Thank you for watching.